All right, let's get practicing in QuickBooks Online. Grab the link below in the description so that you can follow along. All right, here we are in the QBO Gym. And the QBO Gym is a place where we have numerous exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Every single month, we come out with new exercises for you to practice and complete and get real hands-on experience. And we break it down for you into 4 different sections. So today we are going to be working in the November cooldown section. At the top here is a little video to give you a synopsis of what's going on in Craig's world that month. He is our fictitious business owner. Further down is an interactive quiz to test your knowledge. And then down at the bottom are all of the exercises within this section. So today we are going to practice running Craig's reports. You will need to be in the sample company. If you're not sure how to get into the sample company or get your own free QBOA account, just go ahead and click on the link below in the description. So our scenario today is that after you have reconciled your bank accounts, it's time to run reports. You'll create a P&L or profit and loss and balance sheet for Craig. Now that business has been picking up, Craig is starting to work on some longer term business goals, but he feels like there should be more money in the bank than there is, and he doesn't really see how QBO can help him plan for the future. So can we help him with this? Let's prepare for the meeting with Craig. So the first thing we'll need to clear up with Craig is the difference between cash and accrual accounting. With cash accounting, you report on transactions only when money is actually received or spent, as in when it goes into and out of the bank. This is a simpler, easier method, but it does not accurately reflect what is going on in the business. Craig may land a $20,000 contract, but if it does not show up on his reports, it may look like his business is not as healthy as it actually is. With accrual counting, you report the transactions when money is earned, even if you haven't received it yet, and when expenses are incurred, even if you haven't paid it yet. This is a more accurate reflection of the state of the business, but it can sometimes make it difficult for business owners to wrap their head around the numbers, especially when it feels like they should have money, but they're not seeing it in the bank. So first, let's take a look at how this is reflected on the balance sheet. To do this in the left nav bar, we need to click on Reports and then select Balance Sheet. So here I am in the sample company. This is the dashboard. Over on the left nav bar is Reports. Go ahead and click on that to get to the reporting center. And then we are going to select Balance Sheet. When you click on it, the report will be run for you. Now, Craig's accounting method is currently set to accrual. This means he is seeing money that has been earned but not yet received, and this is reflected in the accounts receivable account. So let's see what happens when we change it to cash. Under accounting method, we're going to click on cash and then run report. So here is that accounts receivable right there. It's at 5281.52. If you scroll to the top here, you see accounting method is set as accrual by the little radio button there. Let's click on cash, and then we're going to run the report again to see how this has changed. Keep in mind that the sample company is always changing dates, so the numbers here may be a little bit different than what your screenshot is. Or within the screenshot here, excuse me. So you'll notice that the accounts receivable account is not shown on that cash basis account or report. It was right up here and now it has disappeared. So you'll notice some other differences on the report as well. So under current assets, the inventory asset account is not included. It was on the accrual, but not cash. And in the cash basis accounting, the value is only realized when items are actually purchased and sold, not when they are just waiting to be sold. So this also affects the balance of the opening balance equity account, as this account includes inventory adjustments. The accounts payable is the total of bills that have been recorded but not yet paid. This account shows up on the accrual basis report. Also, under other current liabilities, the Board of Equalization payable account reflects the current sales tax liability. On the accrual basis report, this will include sales tax liability for invoices that have not been paid yet. On the cash basis account, this will include only the sales tax liability for the invoices that have been paid. So feel free to click on between the two reports to see what the differences are. But for right now, we're going to move on. So simply, take a look at what you have right here. Here's that Board of Equalization payable that we were talking about before, and some of the other things that are missing. So if you want to, just go ahead and click back and forth and run the report so that you can see what the differences are and how the numbers are changing as well. So let's look at the profit and loss report, also known as the income statement. To do this, we're going to go click on reports to get back to the reporting center and then select profit and loss. So over here on the left nav bar, go ahead and click on reports again. So we get back to the report center, and this time click on profit and loss so that we can see the report run for us. So while the balance sheet shows the current balance of all Craig's accounts at any given time, the profit and loss shows the activity of Craig's business across time. This report is also affected by whether Craig is set up by cash or accrual accounting. While all of the accounts will be on both reports, whether it's cash or accrual, the totals in them will differ. In accrual counting, the income accounts will reflect money that has been invoiced even if Craig has not received the money yet, and the expense accounts will include money that hasn't been paid out yet. This is why it might be a little confusing to Craig. Feel free to click around between the two reports again to see the differences, but when finished, let's take a look at another report that might be helpful to Craig. To do that, we'll click on back to report list. So again, in here, the accounts themselves are going to be the same, but the total will be different. And that is because cash basis is based off of what money has actually been received and what bills have actually been paid, not ones that have been invoiced and just haven't received the money yet, or include expenses for bills that have been given to us, but we haven't paid out yet. So just know that that's kind of the difference in how you can see the difference between the two reports and why the numbers would be adjusted here. So again, if you want to play with this, just go ahead and click on the radio buttons and run reports so that you can go ahead and see the differences. Right now, we are going to go back to the report list. This takes us back to the reporting center. So just click on back to report list to get the reporting center pulled up again. Now, the statement of cash flows, this can be a nice visual way to see where Craig's money is coming from. So let's go ahead and take a look at this one. To do that, in the business overview section, we're going to click on statement of cash flows. So if you scroll down a little bit, here's that business overview section. Here is that statement of cash flows. Go ahead and click on that to have the report run for you. Now you'll notice that the statement of cash flows is divided into three different sections. The operating activities, which we'll discuss in the next section, investing activities, and this reflects income or the loss of income from investments made with business funds. Financing activities reflects income or loss from an external source such as the owners, other investors, or a long-term loan. So again, here is that operating, investing, and then financing activities. You'll notice that this report does not have a cash or accrual option because both the future and actual activity is combined on this report. So up at the top here, there is no option to choose between for that reason. Now, at the bottom of the report, you'll see the total cash at end of period. This is the amount of realized or cash in hand money that Craig has actually received. So that cash on hand at end of period is right there. Note that the sample company has several things that are not set up correctly here, so Craig's books are badly in need of a cleanup. Doing so is outside of the scope of this exercise, but just something that you would want to keep in mind. But let's go ahead and take a look at the operating activities in more detail. So this section starts with net income for the period on accrual basis. If you click on the number here, it's going to pull up the profit and loss report to show you how the number is actually determined. So net income is right there. And if you click on this number, it'll pull up that profit and loss. Although this section starts with accrual, however, what follows are all of the adjustments needed to translate that number into realized cash, which is the accounts receivable payable, the inventory asset, and the sales tax liability. Also included are other current liabilities, also known as short term liabilities. And that is all showing down here. Net cash provided by operating activities is really the number that Craig wants to watch. This number is going to be the best indication of the health of the business. So that is this right here, that net cash provided by operating activities. So, another tool that we can use to help Craig understand his cash flow better is the planner provided by QBO. And this is what we are going to end up doing in the next exercise. But this is how you would do it. This is how you would run reports, and just like a better understanding of how to actually read these reports. And if you have any questions or want to know more about the QBO gym, just go ahead and click on the link below in the description. We are moving through the cool down section with our last exercise where we practice using the cash flow planner. And I will see you in the next video.